So guys, when it comes to diversification, my rule of thumb is to try and not let any one individual position make up more than 10% of the entire portfolio. And I've done a pretty good job of sticking to that over the years, but I'll tell you what, right now we are cutting it close with a couple different positions. And across my entire portfolio, just 5 stocks make up nearly half of the portfolio's entire value. And in this video, we're gonna go over what those 5 stocks are, why I own them, and how much they're paying me in dividend income every single year. But real quick, before we get to those, I wanna hear from you. Leave me a comment below and let me know what are the top 5 largest positions in your portfolio. I'd be curious to know. But anyway, getting into it, guys, just for some context into my portfolio, this is where things are sitting right now. And we're looking at this over here using my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download the spreadsheet in the description of the video. And what we're looking at here is my combined portfolio value. So this consists of both my main taxable brokerage account as well as my Roth IRA. And the current value is sitting at $79,397. So we are inching closer and closer to that 80K mark, guys. Any day now we'll be there. And as far as the dividend stats go, right now I'm rocking a 3.67% dividend yield, which is not too shabby, especially considering the dividend growth rate in my portfolio is sitting at about 8.5%. And my yield on cost actually is even higher. My yield on cost is above 4%. So overall, I think this is looking really good. And then looking at the dividend income breakdown, at this point in time, my projected annual dividend income is $2,911. So we are, what is that, guys? $89 away, less than $89 away from reaching $3,000 of annual dividend income. And my goal, guys, is to hit that by the end of this year. And I'm like 99% sure I'll be able to get there. I don't know what's going to stop me at this point. We're close enough. But anyway, this breaks down to about $242 every single month, or about $56 every week. And on a daily basis, guys, I am bringing in about $8 in dividends without having to lift a finger. $8 for the rest of my life. That's a pretty sweet deal. Now, in my combined portfolio here, between my 2 accounts, I currently own 17 individual companies and I own 2 ETFs. And my 5th largest holding across all of these is going to be Johnson & Johnson. And one of the things I really like about Johnson & Johnson is how well diversified it is within the healthcare sector. They generate billions of dollars every single year, not only from their innovative medicines, but also from their medtech segment, which is also putting up some pretty impressive numbers. And in addition to that, Johnson & Johnson isn't reliant on a single drug or medical device to drive revenue. So we can see both of these segments are supported by quite a wide range of products. Overall, Johnson & Johnson is just such a stalwart in my portfolio, guys. This is a great example of a sleep well at night stock. And this is one of those holdings that I just don't feel like I have to worry about. And as far as the dividend stats go, it definitely has a proven track record of being dependable with a 60+ year dividend growth streak. But anyway, now taking a closer look at my position, at this point in time, I have about 36.5 shares of J&J and an average cost of $158.92, which is not a bad average cost. This is going to leave me with a near 11% total return, which includes dividends, and every single year, this one position is bringing in over $180 of dividend income. Now with that, guys, as my 5th position, Johnson & Johnson currently makes up 7.7% of my total portfolio, and I've held this stock for quite some time. It looks like my first tranche was back in January of 2021, and I picked up this first tranche for just over $160, which is not too far off from the current share price. But anyway, guys, it wasn't too long ago that I was adding shares of Johnson & Johnson for quite a bit lower than the current share price and also quite a bit lower than my first tranche. It looks like my most recent purchase was at the start of July, and I was able to buy shares at that time for about $146, not too shabby. But anyway, guys, now moving on to my 4th largest position. This one is going to be Realty Income, aka the monthly dividend company, which I consider to be another sleep well at night stock. Throughout this company's history, they've pretty much always had extremely high occupancy rates, and we can see here that even going back to the year 2000, there hasn't been a single time where the company's occupancy dipped below 96%, which is very impressive. And as far as their tenants go, Realty Income primarily leases to very stable and non-discretionary type businesses. Most of their tenants are going to be things like grocery stores, convenience stores, dollar stores, home improvement stores, stuff like that. All very safe and resilient industries. And just like with Johnson & Johnson, Realty Income has a very impressive dividend track record. First and foremost, we can see here that they have a pretty sweet 5% dividend yield, so you'll definitely be able to generate some nice monthly income from these guys, hence the name, the monthly dividend company. But anyway, they've also been very solid in the growth department. Realty Income has been consistently increasing their dividend for nearly 3 decades and has maintained a dividend growth CAGR just north of 4% throughout this time. And as far as my position goes, I have just over 100 shares of Realty Income at an average cost of about $54.50, and including dividends, my total return is going to be about 25% with Realty Income, and this is my portfolio's largest income generator, guys. Every single year, Realty Income alone is bringing in over $300 of dividends. That is awesome. But then looking at the weighting right now, Realty Income makes up 7.94% of the overall portfolio. So just a little bit more than what we saw with Johnson & Johnson. But anyway, looks like my first tranche with this one also came back in January of 2021. This is the same date actually as Johnson & Johnson. And what I think happened, guys, I could be wrong, but if I'm remembering correctly, I think this date that we're seeing here, January 14th, 2021, was when I transferred all of my holdings over from Robinhood into Charles Schwab. And the short version of the story behind that is that I used to have two different investment accounts. I had one on Robinhood, one on Schwab. I ended up just deciding to consolidate them into one. And so I'm thinking, once again, if I'm remembering correctly, I'm thinking that this January 14th was the day that I officially transferred things over. But anyway, guys, back during this time, it looks like Realty Income shares were trading for about $58, which is a bit lower than where they're at now, but is a bit higher than my most recent Realty Income purchase, which was earlier this year, back in February, where I was able to pick up shares for about $52 per share. And somewhere around this same time, I'm thinking maybe it was sometime just a little bit before this, Realty Income was actually below $50 per share. And I was loading the boat even more at that time, which was awesome. I loved being able to do that. But anyway, guys, now moving on to my third largest position. This one is a company that needs no introduction. We're talking about Visa. And I absolutely love this company. I think this is like the gold standard of stocks. And I actually can't think of a more financially perfect company than this one right here. Visa is just a free cash flow printing machine. And my goal is to make it the largest individual stock position in my portfolio. And we're really not too far off from that, actually. At this point in time, guys, I have 23.74 shares of Visa at an average cost of $269.36. So this is going to leave me with a 6.4% total return. And I think most of these returns actually came just in the last, I would say, 2 or 3 weeks. Visa's had a nice little run up lately, so a lot of these returns, like I said, have come very recently. But anyway, guys, with this, Visa is bringing in almost $50 of dividend income every single year. Not a whole lot. You know, Visa's not a super high yielding stock. In fact, the dividend yield is less than 1%, but they do make up for it with their very high dividend growth rate sitting around 15% or so. So I'll take it. And then as far as the weighting in my portfolio, Visa currently makes up about 8.5% of the total portfolio. So we're starting to get up there in terms of the weightings, guys. And this is a pretty recent addition to my portfolio within the last year. And I was able to pick up this first tranche for about $260 per share, which is not too bad. And my most recent purchase was actually just a couple weeks ago at just under $270 per share. And right now, I think it's somewhere in the 280s, so it's starting to get up there. But anyway, guys, now moving on to my second largest position. This one's probably no surprise. This is also my first largest individual stock position. This is another company that needs no introduction. We're talking about Starbucks. And the reason that Starbucks needs no introduction is because it is one of the world's most recognizable brands with an extremely loyal customer base. And that's one of the big reasons I really like this company. You know, while there is some pullback in visits during economic downturns, we've definitely seen this here in 2024, their customer base has historically shown some resilience even when discretionary spending is typically reduced. This happens because Starbucks has built such a strong emotional connection with its customers that for many it's not just a coffee run, it's a habitual and ritualistic part of their daily routine, and not having that small indulgence can throw off their whole day. But anyway, as far as my position goes, I am currently sitting on about 78 shares of Starbucks at an average cost of $86.34, which is going to leave me with about a 12% total return. And I gotta think that recent pop in share price, guys, it really wasn't too long ago that Starbucks was, as a lot of you guys already know, it was below $80 per share, and it was there for quite some time. And during that time, I went on a huge buying spree with Starbucks. It was pretty much all I was buying every single week for, man, I would say a good month or maybe even a good month and a half. And in that time, I was able to bring my average cost down from somewhere around $90, maybe even in the low 90s, to where it's at now, you know, $86 or so per share, which is a nice improvement. So I'm definitely happy about that. And with all of that buying, guys, that really gave my dividend income a nice boost with this position. At this point in time, Starbucks is bringing in about $178 per year in dividends. That's awesome. And as far as the weighting goes, we are officially in the 9% range, guys. Starbucks makes up 9.16% of my total portfolio. And there's that same date again, January 14th, 2021. So this was probably another transfer over from Robinhood. And at this point in time, it looks like the share price was $102.86. So that's quite the hefty share price for Starbucks. But as you guys can see here, my most recent purchase was just a couple of months ago at the end of July. And like I was talking about, this was when the share price was below 80. And it looks like my most recent tranche, it was $79.28, which is great. And now, my friends, moving on to the largest position in my entire portfolio. This is going to be none other than SCHD, aka the holy grail of dividend ETFs. And I know it's not necessarily a dividend stock, it is a dividend ETF, but nonetheless, this is my largest position. And in my opinion, this really is the full package. If you're looking for a solid dividend ETF, I think it's going to be hard to find something better than SCHD. There's some other really good ones out there, but I'm certainly partial to this one. With this ETF, you're not getting sketchy stocks with no proven track record of success. You're not getting these yield traps or anything like that. You're buying into high quality, recognizable companies with strong financials and a history of consistently growing their dividends. We're talking companies like Coca-Cola, Home Depot, Pepsi, and 100 other dividend-paying companies. And the dividend stats are top-notch too. I mean, not only are you able to lock in a decently high yield at 3.4%, but you're also getting a dividend growth rate that rivals many of the great dividend growth stocks out there. So SCHD is looking to be double trouble in the dividend department, and with a 12-year dividend growth streak, we could actually call this ETF a triple threat. Now, looking at my position, guys, I have just over 90 shares of SCHD at an average cost of $75.45. And if you're familiar with the channel, if you've seen my portfolio updates, then you'll already know my goal by the end of the year, in addition to hitting $3,000 of projected annual income, my other goal, my other side quest, I should say, is to get 100 shares of SCHD. We are less than 10 shares away, guys, and I know we're going to hit it. It's without a doubt. But anyway, guys, right now I'm sitting with a 13.2% total return with SCHD. I will take that, and every single year, I think this is actually my second largest income generator, but every single year SCHD is bringing in $255 in dividends. And as far as the weighting goes, guys, it really, isn't too much heftier than what we saw with Starbucks by maybe just about 1/4%. But anyway, my weighting with SCHD in the portfolio is 9.43%. And it looks like my first tranche with SCHD was back on April 28th, 2022. So I've owned it now for, I guess, almost 2.5 years. And it looks like my first tranche I was able to pick up for $76.85. And I'm thinking this was right when I started my Roth IRA. I don't remember exactly when that was, but I think the timing lines up with this April date that we're seeing here. And my most recent purchase, guys, was yesterday. Yesterday, as I'm recording this on September 9th, and I was able to buy this tranche for $82.31. And I actually buy SCHD every single week in my Roth IRA. So in my Roth IRA, it's only two different ETFs. We have SCHD, we have VU, and every single week I just dollar cost average into both of those. But anyway, guys, now just totaling everything up, it looks like with these 5 stocks, the combined total weighting is sitting at 42.78%. So almost 43% of my portfolio is just within these 5 stocks right here. The total income that is generated from these 5 positions comes to $979.51, which is actually only 33.6% of my total income weighting. So that's interesting. While these 5 positions make up about 43% of the overall portfolio based on market value, it's only, in the low 30% range in terms of dividend income. I'm actually happy to see this. I like the fact that my portfolio is more spread out as it pertains to where the dividends are coming from. And so with that, I feel very comfortable with this top 5 here. I think this is a very solid group of stocks and ETFs, but still, my portfolio is far from perfect. And in this next video right over here, I'm giving you a brutally honest review of my dividend stock portfolio. In this video, we're going to go through my entire portfolio and as objectively as I can. I'm going to share the good, I'm going to share the bad, and I'm going to give it an honest and thorough review. So click right over here to check that out, and we'll see you in the next one.